Hello everyone. So in this video, let's discuss about the performance fees, which is also called as incentive fees. So incentive means basically the bonus. So bonus means basically it's an additional amount. So let's say you are working in a company. So you get the salary every month, whether that company is in profits or losses. But if that company is in profits, so they'll pay you the bonus also. If the company is in losses for that year, so you will not get the bonus. So the same way, even in a hedge fund, if the fund is in profits, so we pay the incentive fees. If the fund is giving the profits, you pay the incentive fees. But management fees is different. Management fees is like your salary. So for managing the fund manager has to get some compensation, right? So whether the fund is in profits or losses. So he is putting his efforts. So that's the reason he gets the management fees even though there are losses. But if the fund is in profit, so then he will get the additional amount, which is nothing but the incentive fees. So like a bonus. Okay, now this incentive fees is paid. Some funds pay every quarter, and some funds pay semi-annually, which is nothing but every 6 months, and some funds pay annually, so once in a year. But the thing is, so the investor deals like subscriptions, redemptions, and all happen every month. Most of the hedge funds are monthly dealers. So let's say somebody is exiting on the first month end on January 31st with some profit. See, let's assume the fund pays the incentive fees every quarter. So that means March 31st, June 30, September 30, and December 31st. But in between, if somebody is exiting with some profit, so that investor will not come back to you on the quarter end to pay you the incentive fees, right? So that's the reason you need to charge the incentive fees then and there itself. Okay. So that's the reason every month, even though the fund pays the incentive fees quarterly, we need to charge the incentive fees every month. Why I'm saying every month? Because most of the hedge funds are monthly. If some funds are daily, so very rare funds are daily dealers, and they calculate the NAV every day. So for them, you need to charge the incentive fees every day. And some funds they are quarterly, so you can charge quarterly directly. But most of the hedge funds are monthly, so even though you are paying the incentive fees on the quarter end, you need to charge the incentive fees every month because there are some redemptions. For getting the incentive fees from that investor, from those redemptions, you need to charge the incentive fees every month. Okay. Uh, but what about the investors who are staying back in the fund? Okay, so all the investors will not redeem, right? So it's just like in a bank. So in a bank, everybody will not withdraw every month, right? So some people will withdraw the money. And whoever is staying back in the fund, for them, that incentive fees, whatever is charged, it will be added back next month until the crystallization. What is the crystallization? Crystallization means when you are finalizing the incentive fees. So that is called crystallization. So let's discuss about this with an example so that it will be very clear for you. So let's say on January 31st, sorry, on Jan 1st, you have invested some 100 rupees. Okay. First, first Jan, let's say you have invested 100 rupees. So that means it's a opening assets for that month. Okay. So on 31st January, on the month end, because I told you most of the hedge funds are monthly. So let's say the valuation point uh, for this fund is month end, for example. Okay. So let's say the closing assets on the month end is 120. Okay. So 120. So the closing assets you can say, or in hedge funds and the funds we use the term called GAV. So which is nothing but closing assets before charging the incentive fees. Okay. So GAV means gross asset value, which is after deducting all the expenses. So whatever I told you, management fees. So this gap is after deducting that management fees. Not only management fees, there are multiple expenses like admin fees, audit fees, legal fees, some license fees, taxes, admin expenses. So all that will be deducted. After deducting all those things, this is 120. So that's the reason I told you it's a closing assets. Okay, so basically you have invested 100 rupees. Now your investment became 120. So that means there is 20 rupees profit, correct? So that's the profit. So let's say the incentive fees for this fund is 20% on profits. Okay, so 20% into 20. So that means it is 4 rupees. So 120 gap minus 4 rupees. So it is 116. So your NAV is 116. NAV means basically it is also closing assets. So don't get confused. GAV is also closing assets, but before the incentive is. NAV is the net asset value. This was the gross asset value, and this is the net asset value. So net asset value in a hedge fund is basically after the incentive fees deduction. Okay, so don't get confused with the mutual funds. In Indian mutual funds, there is no separate GAV and NAV because there is no incentive is there. I'm talking about Indian mutual funds. So in some Western funds there is incentive is, but in Indian mutual funds there is no concept of incentive is. And so that's the reason you will not see separate GAV and NAV. But in the hedge funds, so there is incentive is. That's the reason you will see these two values, GAV and NAV. Before the incentive is, it is called GAV, and after the incentive is, it is the NAV. Simple. Okay. And now, so this is the NAV. So let's say somebody is redeeming 2 shares, for example. So 2 into this NAV. So 116. So he will get 232 rupees. So that's the reason we are calculating the NAV. For processing the redemptions, we have to calculate the NAV every month. Okay. So now, on 1st February, next month, so this closing assets of the previous month will become the opening assets for this month, right? Opening assets. Okay. So now whoever is continuing in the fund, so that means whoever is not redeeming, so for them the incentive fees which was charged last month will get added back because they are not exiting. No, they are not exiting. If it is the quarter end, so if it is March 31st, this will not be added back. But this is not March 31st. So that's the reason the incentive is whatever was charged in January month, it will get added back. Add back of incentive fees. Okay. So now the net opening assets will become 116 plus 4. So 120. So again, let's assume the fund is performing very well. So and the gap on February month end is 130, for example. So that means 30 is the profit. So 130 minus you have invested 100 rupees, right? So 30 is the profit. Okay. So on 30 rupees, so the incentive fees, which is 20%, will become 6 rupees. So 30 into 20%. So your NAV will become 130 minus 6. So it is 124 for February month end. Okay. So this is 28th Feb. Okay. 29th because this is the leap year, right? 29th. Okay. So now on 1st March, this will become the opening assets. So 124 will become the opening assets. The same thing happens. So opening assets plus the incentive fees, whatever was charged in the February month, that will get added back. and the net opening assets will become 124 plus 6, 130. Okay. So let's assume the fund is performing well, and on 31st March there is again a profit. So the gap became 140. So gap means gross asset value or the closing assets before charging the incentive fees. Okay. So this is the gap. So that means how much profit is there? 140 minus initial investment was 100. So 40 is a profit. So on 40, so if you calculate 20%, so it will become 8 rupees. Okay, so 8 rupees is the incentive fees. And your NAV will become 140 minus 8. Okay, so 132. So now this incentive fees will not get added back next month in the April month. So this will be finalized. Okay, so this becomes finalized. And this is called crystallization. So incentive fee got crystallized. Okay. So why the term crystallization? Because so whatever the incentive fees we have charged in the previous months, okay, so that was in the watery form. So you can say in the liquid form. Okay. So liquid doesn't have any shape, right? Any fixed shape. So basically, if you put the water in a bottle, so it will take that shape. If you put the water in a bucket, so it will take that shape. So now, but if you freeze that water, so it will acquire that certain shape. It will not change. Crystal will have a proper shape. It doesn't change, fixed shape. But water doesn't have. So that's the reason this term is used, crystallization, because whatever the incentive fees you have calculated now will not get added back. It is finalized and it will pay it to the fund manager. So that's the reason it is called crystallization. Because you have, so now next month on 1st April, so this will not get added back. So this opening assets will become 132 and there is no add back of the incentive fees. So 132. Now let's say the gap on April month end is let's say 150 for example. So now the profit for calculating the profit, so it is not 150 minus 100. So you have invested 100 rupees, but now you will not pay for 50 rupees profit again, because for 40 rupees profit you have already paid the incentive fees, so you will not pay it again. So now for calculating the profit, so you 150 minus 132. Okay, so you will compare with 132 because after finalizing the incentive phase, this is your new opening assets. Okay, not 100 rupees, because 100 rupees, comparing that 100 rupees, you have already calculated the incentive fees and paid it. Okay, on that 40 rupees profit, 8 rupees is taken by the fund manager and 32 rupees is taken by you. So now your opening assets is 132. So you need to calculate the profit using this value, this 132. So this becomes the new high water mark. So just remember these technical terms. High water mark means basically it's the value using which you calculate the profit for calculating the incentive fees. So now the incentive fees you will calculate on 18 rupees. Okay. So incentive fees 20% is equal to 18 into 20%. Okay, 3.6. Okay, so you will not calculate on 50 rupees. So if you calculate on 50 rupees, you need to pay 10 rupees incentive fees, but it will become double charge. Why? Because for 40 rupees profit you have already paid, so you will not pay it again, right? So that's the reason. Uh, Double charge, it will become the double charge. So that's the reason we revise the high water mark after the crystallization. So whenever the incentive fee gets crystallized, so the high water mark will get revised. Okay, so just understand these terms like high water mark, crystallization, and there is one more term called hurdle rate. So I'll explain about that also. So most of the times by seeing these technical terms, we think that topic is difficult, but not all the topics are difficult. But yeah, this is not a rocket science. Basically, yeah. So the whenever uh, the incentive fees gets crystallized, the high water mark will get revised. Okay, so now the NAV in April month is 150 minus 3.6. So this is the NAV. Okay. For example, let's say at the time of crystallization, there was no profit. Okay. So the fund value, the gap was 90 only, for example. That means there was a loss, 10 rupees loss. So because there is no profit, there is no incentive fees, zero. So incentive fees will become, I mean, it gets crystallized if there is some amount, but now there is no amount. So that's the reason there is no crystallization. So your high water mark will not change. Your high water mark will not change. So you will use the same high water mark, which was 100. So now let's say on 1st April, 90 is the opening assets. Let's say the gap is now 150. Okay. Let me remove this, otherwise it will be okay. So the opening assets for 1st April is 90 rupees, and let's say the gap on 30th April is 150. Now the profit is 150 minus 100. Okay. See, the same gap, but earlier we calculated the profit of 18 rupees. Now it is 50 rupees because in the earlier case, there was an incentive fees which was crystallized. Crystallized means basically finalized. You paid it. So that's the reason you revise the high water mark. Now on 31st March, there was no incentive fees. That's the reason you will use the same high water mark. So now the profit will become 50 and incentive fees will be 50 into 20%. Okay. So 10 rupees. So your NAV will become 150 minus 10, 140. So anyways, on 30th April, you will not crystallize the incentive fees, but you will charge. So whoever is redeeming, basically basically incentive fees will be taken from that investor, not from all the investors. So this is about the incentive fees and high water mark and crystallization. So whenever at the time of crystallization, if there is an incentive fees that will get crystallized and that will be paid to the fund manager. And after the crystallization, your high water mark will change. Basically, your new opening assets will be the new high water mark. Okay, so that's the high water mark and crystallization. So now, as I told, some funds have the hurdle rate. Hurdle rate means basically uh, hurdle rate is the minimum expected return. See, these hedge funds are very risky, so they take very risky strategies. So you may lose your investment. So basically, your expectation is you will get some profit by investing this 100 rupees. Uh, but for example, uh, let's say you keep this 100 rupees in the savings bank account, for example. So without taking any risk, you will get some 6% interest rate. So some banks in Indian banks, so they are paying 6% interest, like Kotak Bank and all. So which is risk free? There is no risk. So now you expect the same minimum return from the fund manager. Okay. So if he is giving more than the 6%, so then he will pay the incentives. Otherwise, he will not pay. So that is called as hurdle, or to be precise, this is called hard hurdle rate. So basically, it is hurdle rate. So hurdle rate means basically it's a minimum expected return from the fund. So let's say it is 6% in this case, in this fund per annum. Okay. So what will happen is 6% means 100 into 6% means 6 rupees per annum. So that means per month it is 0.5. Okay, so I have explained this in the next sheet, so it will be easy for me. Okay, so 6% per annum is the hurdle rate. So you have invested 100 rupees. Let's say the gap on first month end is 120.5. Okay, uh, and the hurdle rate here is 0.5. So basically 6% multiplied by 100 rupees divided by 12 months. So we are calculating per month, right? So we are calculating the NAV of this month. Okay, so 0.5. So your net profit, actual profit is 20.5, but if you minus the hurdle rate, hurdle amount, so it will become 20, 20.5 minus 0.5. So now if you calculate the incentive is 20%, so it becomes 4 rupees. So now the NAV will be 120.5 GAV minus 4 rupees, which is 116.5. So I have changed the amounts because, so in the previous sheet, I have taken the GAV example of 120, but here I have taken 120.5. Basically, I want to have the round figures. So that's it. So now the NAV on January 31st is 116.5. So which becomes the opening assets for the next month. Okay, and whoever is not redeeming, so the incentive fees which was charged in the January month will get added back. So now the net opening assets again 120.5. The same thing will happen, but only additional thing here is hurdle rate. Okay, so 131. So let's say the gap on 28th Feb is 131. The hurdle will become 100 your investment, and 6% is the hurdle rate divided by 12 months into 2 months, because this is second month, right? So that's the reason you need to multiply with 2. So it becomes 1. So net profit after hurdle will become 30, and incentive fees 20% will be 6 rupees, and NAV will become 125. So the same thing, see, whatever we have discussed earlier, the same thing will happen, but the additional component here is the hurdle. Okay, so you need to deduct that while calculating the incentive fees. So, so on 1st March, the opening assets will become 125. So basically, last month the closing assets NAV was 125, which will become the opening assets for this March month. And now whatever the incentive fees was charged in February month, that will get added back. Okay, and net opening assets will become 131 again. And let's say on 31st March, the gap is 140, and the hurdle, because this is third month, you need to multiply by 3, so it will become 1.5. Okay, so your net profit after hurdle is 140 minus 100 minus 1.5, which is 38.5. And now if you calculate 20% on that, it will become 7.7. Okay, so this is the crystallization point, quarterly crystallization. So this 7.7 will get crystallized, and it will be paid to the fund manager. Okay, so NAV is 140 minus 7.7, 132.3. So on 1st April, the opening assets will be 132.3, and your new high water mark will change now, because on 31st March, you have finalized some incentive fees. So now the high water mark will change. Basically, high water mark means it's a reference value with which you calculate the profit for calculating the incentive fees. Okay, so for calculating the incentive fees, you use high water mark as a reference. So you can say high water mark as a reference. That's it. Because you have already paid the incentive fees, so your reference value will change now. So now let's say the gap on 30th April is 140, for example. So that means the hurdle, the interesting thing now here is the hurdle calculation will change because your high water mark will change. So you have to calculate your hurdle on that new high water mark, not on the 100. Okay, so your new high water mark is 132.3. So on that, if you multiply 6% divided by 12 months, into 1 month. So because after the crystallization, after the new high water mark, this is the first month. So that's the reason I multiplied by 1. So it is 0.6615. So the your net profit after the hurdle will be 7.03 something. And if you calculate 20%, so that will be the incentive fees. And if you deduct that incentive fees, it becomes the NAV for that month. Okay. So this is how you will calculate the incentive fees if there is any hurdle in your fund. So hurdle is not in every fund. So only some hedge funds have the hurdles. Okay, so but private equity funds, uh, almost all the funds will have the minimum expected return. So they call expected rate of return. So which is ERR or something. But in hedge funds, not all the hedge funds have the hurdle rates. Okay, so that's about high water mark, crystallization, incentive fees, and hurdle rate. Thank you.